Hey there, it's time to dive into how the escalating tensions in the Middle East, specifically between Iran and Israel, could ripple across India's economy. First up, let's talk about the Indian stock market. The benchmark indices, Sensex and Nifty, have already started showing signs of stress due to the uncertainty caused by the conflict. Historically, geopolitical tensions push investors towards safer assets, impacting foreign investments in the Indian market. Now, despite high valuations, Indian stocks have seen significant foreign portfolio investments this year. But here's the catch. Experts believe that if this conflict drags on, we might see a pullback of foreign capital as investors hunt for stable grounds elsewhere. This shift could really shake up the performance of the Indian stock market, which, up until now, has been one of the world's top performers. However, it's not all gloom and doom. Domestic investors have consistently stepped in to offset foreign investment outflows in the past. This local support has stabilized the market and cushioned the blow of reduced foreign interest. So, it'll be interesting to see if this trend continues and whether domestic investment will keep counterbalancing potential foreign withdrawals. Next, let's touch on gold prices. Gold has been on a tear this year, reaching record highs and outpacing other assets. Factors like central banks shifting away from the dollar, institutional investors diversifying, and strong retail demand for jewelry have all played a role. Yet, despite the Middle East tensions, gold's climb has hit a bit of a plateau recently. Why? Well, stronger than expected US labor data has cooled down the gold rush by making a significant Federal Reserve rate cut less likely in the near future. With robust job growth figures, traders are now less convinced about a big US rate cut in November. So, the size of the next Fed rate cut, along with the ongoing Middle East situation, will be critical in determining where gold prices head next. Lastly, let's talk interest rates. Global markets welcomed the US Federal Reserve's interest rate cut in September, alongside policy measures from China, which boosted investor confidence and spurred equities. But now, the escalating Iran-Israel conflict is throwing a wrench into the works, creating uncertainty that could impact central bank policies worldwide. Central banks had begun cutting rates a few months ago after a long period of high rates meant to fight inflation. These cuts aim to stimulate economic growth. However, the Iran-Israel conflict could threaten this recovery by potentially disrupting global trade and supply chains. This uncertainty might make central banks rethink their strategies, either delaying further rate cuts or even tightening policies again if inflationary pressures from rising oil prices and trade disruptions take hold. All right, that's a wrap for today. If you found this video helpful, make sure to like and subscribe for more updates on how global events are shaping our world. Thanks for watching.